Let's welcome in our next guest, Ajay Bodke, CEO and Chief Portfolio Manager, PMS at Prabhudas Lilladher. Ajay, good morning. Always a pleasure talking to you. Let's be a little specific today and let's talk about the Pharma pack. Now, say if the DOJ concerns or the investor concerns about pricing do tend to come true, will it largely be a valuation hit for some of these names or global generic companies which have been in a sweet spot? Instead of trading at 20 times, they may just trickle down to 16, 17, 18 times. That's broadly the impact that you see?
I think after the news was out a couple of days back, we already saw sort of a sharp hit in the valuations on Friday. And then when the market has taken stock, it has realized that it has painted almost all the companies with the same brush. I think there are only a few companies whose names figure among the companies that have been subpoenaed or which have been asked for information from by the US authorities. And that realization sort of has led to this bounce back that many companies, like in the mid-cap space, if you take companies like Jubilant Life Sciences or Glenmark Pharmaceuticals, I think they are completely unscathed insofar as this issue is concerned. But even their stocks were pummeled. So I think there is this reassessment that's happening in the market about focusing only on those companies where there is a possibility, again this is an important word, there's a possibility of some sort of charges that could be framed. But even there I think we're at a very early stage, because my belief and our belief essentially is that even in case of Sun Pharmaceuticals, the increase in prices has happened in those niche segments where there was a competitive environment because of the small opportunity sizes in those niches. There was not much of competitive intensity out there, and hence I think the prices were increased. And per se, I think that is not an offense. It is if you collude with your competitors and then increase prices, which is extremely hard to prove. And as I said, in case of Sun Pharmaceuticals and Taro's case, I think it looks unlikely because the spaces that they were in did not have much of competition, and that's why I think they'd taken the prices up. So even out there, I think the overhang will remain sort of till maybe the end of the current calendar year. But we believe that I think the company should come unscathed out of it. Also, I think there is news that the two key plants for them, Halol, which is the most important plant from where most of the filings have happened, to the US markets, I think, and where supply has stopped for last year and a half, the inspection by US FDA has already started, as the company has already taken all the remedial measures. And if sort of they get all clear, then I think one could see a sharp re-rating in that stock. As also the Mohali plant of erstwhile Ranbaxy, where again I believe that the US FDA inspection has started. So I think these are two key monitorables in case of Sun Pharmaceuticals. In the other companies, insofar as Glenmark is concerned, Jubilant Life Sciences is concerned, or even Aurobindo is concerned, I don't see any overhang about this issue. And I think it's a matter of time before the market realizes it and the stocks again go back to the levels that they had fallen from.
Right, something like a Aurobindo where the maximum drug concentration is very low, that is something which, gives you a hedge automatically against such sort of problems?
Yes, I think in case of Aurobindo, we are particularly positive. We have a medium term, this is 12 to 15 month target price of 943 in case of Aurobindo, based on estimated earnings growth of 14.4% in the current calendar year, and a similar growth in earnings for next financial year. In case of bottom line, we are expecting a 22.5% growth in bottom line for Aurobindo in FY17, followed by around 20% in FY18. And the company's ROEs stand very strong at around, say, 31.5% estimated ROEs in FY17. So I think Aurobindo is a stock which we are awaiting the results, but is well poised for a re-rating from the current levels. And any weakness in price, in my opinion, should be used by investors with a medium-term perspective to get into the stock.
Right. As far as, something like a Lupin is concerned and the news flow that we've seen regarding EIR, the point that you were making about Sun Pharma, the inspections that are going on, of course, outcome is only something which we'll come to know what's happening in the future. But recent development of FDAs seem to be positive for the Indian pharma sector overall?
Yes, I think so. I think the worst seems to be behind us. Many of the large companies had faced problems from the US FDA front. They have spent the last year and a half too in terms of putting in place remedial measures by sort of employing consultancy services of some of the world-renowned experts in this field. And I think now they are inviting the US FDA to come and inspect their plants. So I think over the next 12 to 15 months, one can clearly see the tailwinds of approvals coming in from the US FDA in terms of clearing these plants. And hence all those companies which had done filings from the key plants, I think once they get a relief there, one will start seeing a massive increase in terms of filing, in terms of launches from these plants, and that will give a leg up to the earnings in these companies. So Sun and Pharma and Lupin must be kept a close watch on.
Right. Markets have fallen in the last week and mid-cap index in the last 3-4 days has corrected quite a bit. You at Prabhudas Lilladher do a lot of research on the mid-cap space, on the sectors which are not yet touched or stocks which are not yet touched. Can you just tell us something which has fallen and which is now looking much more attractive? Can you first start with the mid-cap picks that you have, which is now looking better, and some, it can go an overweight on the portfolio?
Yeah, I think I alluded to two names where we are very positive in the mid-cap pharma space. Glenmark Pharmaceuticals, let's take. On 12th of December, the company is expecting approval for the blockbuster cholesterol-lowering drug Zetia, which is a $2.7 billion sales drug in the US alone, and overall around $4 billion of sales worldwide. Now, they have got exclusivity for launch, and they have tied up with Pharma in terms of rolling it out in the 6-month period. So, December to March quarter and April to June quarter is when the company is expecting roughly $120 to $150 million of bottom line to come from launch of this drug, which the company will be using to repay debt, right size the balance sheet, and I think a further few more opportunities also are coming the company's way in the next 12 to 18 months. The company also is going to hold an analyst meet wherein they'll unveil all the NC 6 or 7 NC molecules, what stages they are in, what are the opportunity that they see in those molecules. So I think the stock has come up quite sharply from 980 levels. It went down to as low as I think some 840 levels. So this is the time that if investors are taking a 2-year perspective, one should get into the company. We are estimating a target price of around 1200 rupees in the stock over a 12 to 15 month perspective. A very strong earnings growth on the back of strong revenue growth and improving ROEs and reduction in the debt equity ratio will essentially propel the stock in a higher orbit. The other company in the mid-cap pharma space that has come off is Jubilant Life Sciences. The company primarily is going to benefit from the launch of Ubifil, which is a $250 million opportunity in the medium term for the company in America itself. They also are going to launch it in other European countries. I think there are some 3 or 4 other key radiological products that the company is at advanced stage of the filing. And so I think Jubilant Life Sciences is another company where I see a target price of around 750 to 800 rupees with a medium term perspective. In the cement space, I think we are particularly positive on Heidelberg Cement. We believe the company has got the costs under control. EBITDA per ton should trend up in the current quarter. The results are expected, I think, in a week or so. And we are having a target price in Heidelberg of around 160 to 170 in the medium term perspective. The company also, I think, on the EV per ton, Heidelberg Cement. On EV per ton, the company is quite attractively valued in our opinion. Lastly, I think in mid-cap IT space, in case of mid-cap IT space, we are very positive on Hexaware Technologies. The company has announced a buyback in the recently, when the results were announced. We have a target price of around 260 rupees in the medium term in case of Hexaware Technologies. The company has done very well in this quarter and have given a good guidance for the coming quarter also. So these are the 4 names: Glenmark Pharmaceuticals, Jubilant Life Sciences, Heidelberg Cement, and Hexaware Technologies, which can be a good bouquet in case of mid-cap space, fundamentally strong with a strong earnings growth expected over the next 12 to 15 months.
Right. I wanted to ask about the IT pack and Hexaware specifically. When a company like Infosys is trading at a multi-year low valuation, or a company like TCS is, off their 5-year high valuations, why would you want to go with Hexaware?
Yeah. I think the first is that these companies are trading at a discount to the top tier. Between 10 to 20% discount they're trading to top tier. Some of them are trading at a higher discount to the top tier companies like Infosys and TCS. Number 2 is I concentrate on the offerings that some of these mid-cap IT companies have. As we have seen, there is a clear shift away from traditional IT services, the testing, application development and management, infrastructure services, to digital and mobile services, services which are linked to automation, artificial intelligence, Internet of Things, and some of these companies have developed human resources which basically are concentrating on these high end services where the margin profile is higher, and which basically is what the larger companies also are trying to move towards. But because they are so large in scale and size, it will take time for them to move significant amount of their revenues from these services. That's why the opportunity basically is to spot companies which are concentrating on the high-end services and where the margin profile is expected to move up sharply over the next couple of years. And Hexaware, in our opinion, fits that bill perfectly. And that's why we think that Hexaware has the company is trading at a good valuation, and one can take advantage of the uncertainty that's there due to US elections and get into a company like Hexaware now.
Right. Just a word on Infosys, TCS, maybe HCL Tech as well. They are also looking attractive considering the valuations, considering, great businesses models that they have been. Do you think they are looking attractive? They may not give great returns like Hexaware, as you pointed out, where there is a delta on margins, revenue growth, new product offerings. But they can give decent returns from here on?
I think if one is taking a medium-term call, I think there is not, the margin of safety is quite high in these companies. They have large amount of cash on the balance sheets. They are growing their top line and bottom line in higher single digits. And from that perspective, the valuations also are attractive now. So, however, one cannot expect a significant jump immediately in these companies. So from a value perspective, I think companies like Infosys, HCL Tech and TCS do offer a good entry point. But one will have to be patient with these companies.
Right. Just a quick word on the PNB Housing listing today. Any view on that and the valuations?
See, we are positive on the franchise. It's a very well-run franchise, and we had recommended investors to go into an IPO. I think, however, I feel that one needs to be cautious on the entire NBFC space, because one has seen a very sharp up move over the last 6 to 8 months in that space for the right reasons. I think the cost of funds has gone down in case of those franchises that are mainly dependent on wholesale markets, and their asset quality being pristine, not being exposed to the corporate side and being exposed to consumer side. I think the market has given them sharp re-rating. However, I think from the current valuations, one needs to be cautious in case of not only PNB Housing but almost all the NBFCs.
Right, Ajay. Thank you so much for taking out time for us. Hope to see you again soon.